The goal for any trader is to scale up their business, but to do this, you must trade like you have size now. Now, the trouble is, most traders who trade single or a handful of contracts trade like they're one-lot traders. So the route to making a lot of money for any trader is to perform on a small scale and then scale up the number of contracts in order to multiply future earnings. A trader who can average a modest 2 points per day on the ES trading one lot is not going to become rich, but increase their lot size by a factor of 10 or 100, and the number of ticks that they can theoretically pull from the market is going to increase dramatically. However, the trouble is that a trader needs to change their mindset before they start increasing their lot size, and this can be an issue if you're not careful. Take the example of the ES. Your average newbie trader might look at trading 1 or 2 lots at best. This is a very sensible tactic for the reason that even if you have a large account to begin with, your chances of making money consistently straight away are pretty slim. So the aim of the game is to keep the cost of learning to a minimum. The trouble is that in terms of money, the swings are going to be relatively small, and this can lead to the issue of not placing enough importance on a trade of small size. Now, you might be thinking that it's not a problem thinking like a one-lot trader if that's what you are, but I can assure you it is. If you can't approach the market with the same degree of importance when trading 1 lot versus 100 lots, then you're probably not following your plan properly. And not following your plan is likely to mean not making money consistently, which in turn means not trading bigger size. As you're developing as a trader on small size, you're learning all the time, and it's how you react to situations that will start to create strong habits that will act as the bedrock of your trading. If you don't treat your trading as seriously as you should, then you are likely to be forming extremely bad habits such as not taking your stops or just trading impulsively. Perhaps even more important, however, is the fact that the longer you take to begin to trade as you would if you were trading a much larger size, the more of your time you will have lost. This may seem like a trivial point, but when you consider that the process of learning how to trade happens over the course of many sessions, it's no surprise to see that there are traders who take years to begin to get a hold of consistency. Your time is precious, and you will never get back what is already passed. So how do traders who have earned the right to trade larger size act differently? There are clearly a variety of aspects to that question, but in terms of trading effectively enough to warrant a large size, 3 points stand out. Number 1, they act decisively when the time is right, and they make sure that they do not miss their setups. Number 2, they do not take rash or impulsive trades because it always matters when a lot of money is on the line. 3, they accept the risk of trading means that they will have bad trades, days, or even weeks, so they stick to their stops and daily loss limits no matter what. But to bring these ideas to life and have them really mean something, there's one change that you should make today. Change the way you think in terms of P&L from dollars or ticks to the ticks lot size for each trade. So this means that if you make 3 points in the ES trading 1 lot, you've performed better than if you make 100 points trading 100 lots. So in the first case, you made 3 points per lot or contract, and in the second case, you made 1 point. Normalizing P&L for size in this way allows you to appropriately gauge day-to-day performance, irrespective of actual dollar gains or loss. Assess performance by looking only at dollar gain or loss could artificially boost your confidence when taking very few prices on larger size than normal, and also inhibit a trader's desire to press forward in good trading conditions, as the money made can seem like a decent amount. Of course, watching P&L can also evoke the strong emotions of fear and greed too. Trade like you have size now. So if you think big and trade like you have size now, for example, you make sure you take your trades when they present themselves, you never trade impulsively, and you always respect your pre-planned risk limits, you'll have every chance of using a lot size to leverage your profits as shown in the image here. Changing the way you measure performance to tally the number of prices you make or lose irrespective of lot size can help you start to treat your trading with the respect that trading large size demands.